Well, good evening. Ira Epstein, and here we are on Naysayer Day. What do I mean by that? Well, Naysayer is June 1st, 2023, around 6:15. And Naysayer are the people that don't believe the Fed can follow through, and they reverse course and reverse what the Fed thinks. Now, in all fairness, we have had the Fed vice chair nominee and Mr. Harker both coming out and talking like very big moderates. The one I pay attention to is the Fed nominee for the vice chair, because in reality, he's the wingman for Fed Chair Powell. And if he's speaking, he should be speaking for the Fed chair without the Fed chair having to do it. That is what your wingman does. And he is a super dove right now, giving you all the reasons yesterday as to why the Fed can afford to pause. Now, for me, I'm having a problem with it in this sense. I looked at the ADP numbers today. They're super strong. They were looking for 180,000 additional jobs. They got 280,000. Now, traders will look at the Challenger Gray number. It's a minor index. It's not a big boy index. You don't hear the people, hey, guess what the market did today? It saw a decline there. All the focus was on that number, which surprised me. The other thing that you looked at was the increase in wages, which has slowed down dramatically. It has. We are not seeing the amount of wage hikes that were there, but it's still a hefty 6%. So what did the market do? The market has made a decision and priced in. This is very important. Priced in that tomorrow's jobs report, no matter how it comes out. I know this sounds crazy. The Fed is not going to hike come June 14th. You went on the Fed watch page from a 72% probability of a 25 basis point hike yesterday, May 31st, to today, June 1st, of 18%. Now, everybody's looking at the same numbers I am, but they have flip-flopped just like that. Okay. Are they right or wrong? Time will tell. We're going to get the jobs report in the morning. I have seen numbers from just under 200,000, 188,000 or so jobs is what one service is claiming is the estimate, to people saying as much as 230,000 new jobs. By any standard, that's still a very strong number, but when you compare that when we came out of COVID, you were doing 500,000 jobs, and now you're down to a number that is a third of that or less, the traders are saying, now, no matter what the number is, the Fed can take a time and pause because the numbers on its own weight are going down. That is the argument. I know of no other argument that makes sense for what they're all arguing right now. I don't fight the market. If you fight the market, you lose. You will get caught. If you're a trend trader, it turns in the market. Today was a turning point in the market. The market got super bullish in stock indices. It started higher and it never looked back. Then it carried into the metal markets. It made the dollar break. As the dollar broke, commodities everywhere got a lift. That simple. Not a hard game to figure out. You've taken crude as an example from the $67 range just in the past 72 hours back to $70. Dollar influence to a degree. We have the OPEC meeting this weekend. Is anybody going to take on Russia and say, hey, you're overproducing, you're not doing what you say? I don't see it. The last thing Saudi Arabia wants is a price war. They got into it once before. They don't want to help the world and drop oil prices. That's not their game. So they all have to figure out, are they going to do a cut? If they cut, they know Russia won't cut. What's going to happen? Give you an example on Russia. I mean, you just got to love it. They've agreed with the UN to allow Ukrainian grain out. Agreeing is one thing. Doing it is another. They're not approving any ships. Now, what are you going to do in the UN about it? They have veto power on everything. It doesn't work this way. They're at war with Ukraine. They are not going to agree. They'll give you all the lip service you want and agree with you that way. They won't follow through on the agreement unless it betters their situation. And putting out more oil or cutting oil production from their point of view, that's not the thing to do. We need you to cut the oil so that I can at least get the same price with my $25 or $30 discount that was there. But if you produce more, that's going to go down. It's worse. Well, wheat prices, they're sitting on a mountain of wheat there. They're going to release it on the world to those that will buy it. That keeps the prices under pressure. Same thing. So when you look at the S&P, the market had trouble first at the 4,000 level, then the 41. Now we're at the 4230 level. And as you can see, you're up here fighting an important battle, but the bulls are winning the day. You've got the pattern of higher lows, higher highs. The day's lost if you get back under now right here, 4173. If you take that out, you break the pattern of higher highs, higher lows. Number two, where are the moving averages? The battle has been around the 18-day average of closes. As long as you stay over that, you have upside bias. I teach in my full charting course that when you're over this number, you should have bullish bias. When you're under it, bearish bias. It's a filter on swing lines and your other indicators. Where's the resistance and why does the market keep stopping? Where? It is right in front of you. If you don't learn how to work with Bollinger Bands, shame on you. I have a 15-chapter video course that walks you through this so you start understanding, hey, without that, why is the market stopping there? Is that a spot you get short? Is that a spot you get out of longs? How many of them do you do and how do you do it? Well, I tie it together with slow stochastics and it teaches it to you. At the end of this, you'll see that video. Learn. That is the key here. Learn. You're in a resistance area. The mentality is, regardless of what the report says, the naysayers, that's what I call them, will say it's not bullish enough, the Fed should go into the pause mode. That seems to be what's happening. And some of those naysayers have joined the Fed. Harker is certainly one of them. Jefferson is sounding the Fed vice chair like he's going to be one of them. There's a group that aren't. Ballard, Mester. I mean, I can go on and on with those that don't think that is the right thing. I want to see the data tomorrow. Then I'll stick my neck out the way it is. I think I have said that consistently to you for 2 weeks. Let me see the data and I'll make up my mind. Do we have an embedded reading in NASDAQ? We certainly do. Are the people still buying like there's no tomorrow? The NVIDIA, the Apples and all. They are, because every article you read in the paper, they go, what today is a $40 billion industry, in 2035, it's going to be a $1 trillion industry. So the world wants to join in up here. Do people pay attention to valuations and so on? Not when you get this type of frenzy. If you don't realize that, herd psychology goes to work. Later, they'll start figuring the other parts out. Is the market in an uptrend? Absolutely. Until that red line closes under 79, each of these purchases are coming in on the breaks, and I think the trade just keeps buying them. I mentioned it in my morning subscriber video. I showed traders right where I thought the number would be bought. You take a look at that video if you're a subscriber. Tell me I wasn't on the money with that, and I gave you where the resistance would be. It's looking pretty good. In the Dow, lower highs and now a higher low. I don't like playing that type of game. You've stepped out of a trend. You got one part, the resistance here, the support coming up. Market's got to make a decision. We never did embed. We only got oversold. Embedded means you locked in with the momentum indicator called the slow stochastic, or bullish or a bearish situation. Embedding is when you get both numbers under it, and then when you get the spin away, the market often gives you a pop to the upside or the downside if it was the embedded was on the top. You have an embedded on the top. If you take a look, not anytime recently, you did it once back here, and when you lost the embedded reading, the market went into the tailspin. I teach you all this so that you can look at it and play with those indicators. Does it work all the time? It works a pretty big chunk of the time in terms of the momentum, telling you what markets should be doing in terms of pricing. I believe that momentum leads price. Price doesn't lead momentum. Here, give you a prime example of what I'm getting at. If I can get this to work for me, it's not going to work, unfortunately. You had an embedded reading and you lost it right through here. When that happened, that tied in right over here. Market should be going to the 18-day average, and that's just what it did there. When we get to the 5-year note, you just lost the embedded reading. So I'm looking for the market to get up there right away. Before it gets back under these lows, I'm looking for it to get there. Now, the funny part is, and I'm laughing, ho, 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 the 18-day average just got underneath the 100. You actually have a bearish crossover in the market. So the market is saying, yeah, this rally's coming up there, but it should be a failure rally unless you get the 18 to crisscross back over the 100 again. We'll see which one works out there. In the dollar index, what happened tonight? You lost the embedded reading. So this is the end of that trend up, unless tomorrow, only tomorrow, the red line closes back over the 80 level. It's already at 73. It can happen. But that's how you start playing it. You get the what ifs. At the same time, remember I told you that the euros, 40% of the dollar is made up of the euro. So if the dollar breaks, the euro is going to go up. Tell me that didn't happen, and here's your continued follow through tonight. So my work would have said to you on this big break today, not tonight, you're out. This break has run its course. Now's the time to be out of the market. Will you give back some money, or if you put on new positions, lose at turning points on that? Yes, that's to be expected. You, nor I, nor anyone I know has a system that calls market tops and bottoms in terms of that. But in terms of momentum, if you add a position and it's telling you, hey, there's reasons to be coming out, you follow it accordingly. You don't have to. You can do whatever you want, but I know what I teach and what I like. In the British pound, once you got back here over that number, went right up to today. Today's the day you hit the target, the 18-day average, and you went up from it. You're oversold in Bitcoin. I don't see anything. Higher high, lower low. Not hearing a lot of Bitcoin people cheering there and saying, rah, these markets are going still up to, what was it, $100,000? I keep hearing that every time we get a rally of $10,000. But when it falls 5,000 back, those people are just quiet. They disappear. In Brent versus WTI, well, why would you want to gamble on what OPEC is going to do or not going to do? You don't have any control over it. We'll know over the weekend. Did you hear that they didn't invite some of the major networks, 3 of the major networks? In order to attend these OPEC meetings, you have to have an invite. The big boys didn't get invited. I don't know what that's quite about. When we look at the Brent crude, you tell me the number the market went to, the Bollinger Band. And what did it do from there? It's exactly what I teach. You learn how to play with some of these things. That doesn't mean it couldn't keep going lower. Example, when you hit it here, you at least got your bounce, but you never embedded. You hit that, you rallied, and then you fell. But you don't stay under this Bollinger Band more than 5% or over it. So the guys that are selling it down here going, this is it, it's going, they're rarely right. I want to be with the 95% people, and that's what we teach you in the course that's got those 15 chapters on how to work with that. The herd mentality, the press is always wrong. I used to laugh because we would watch in the old days before the internet became this popular. And I'd see what they do on the press, and I had a technique back then. I would tell my traders, if Tom Brokaw or this name or that name starts talking about oil or this going up or down, you want to be the opposite way the next day, reverse, because they're so late when they put it on the news that you want to be the other side. It did us fairly well over the years. Again, you hit the Bollinger Band. You got your pop right there. Gasoline. I had told you, and I feel good about this, that as we were rallying here, I said, no, you don't want to be long into the holiday now. It's over. The gasoline stations did their buying. We're more interested in how much do they have to replenish, and we wait for some numbers on that. But this is where it's buy the rumor, sell the fact, and look at how the market has given that up. Nat gas is a surprise to me as to how bearish it is. It needs hot weather to see it come alive. Now, Chicago is not the United States. It's in the center. We're going to have hot weather into the 90s now for 3-4 days. But I know my wife's in New York right now, and she'll be lucky to be in the 70s, she told me. We were wondering if they were going to get the heat, and they're not. So you need the East Coast to really heat up before this is going to come alive. Otherwise, they keep adding storage until you burn it off, and that's weighing on that particular market. So you heard me mention what's going on with my slow stochastic course, my enhanced Bollinger Band course. It's all tied together as one. I want you to learn from it. Why? Because it gives you an idea when the market's getting excessive. You see these plays, and this is where the news will be the most bearish. This is where the news will be the most bullish. And you look to see where you're in relation to it. What's the pattern? Have you been going sideways, up, or down? You learn that. Here's how you learn more. You can click up here at any point, take a look at the ad. The cursors will just move your cursor to the top. The icon will appear. You're right into everything you need. I'm Ira Epstein. You have a good evening. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.